Yeah, so we are being live streamed on YouTube. Yeah, every year, I've done it 4 years now, but 2 of the past 4 years, I've done this one section underneath the Jumbotron.
Nice.
And it's got 52 tickets up there, 52 seats. It's a private section. It's awesome. It's got a great view, and it's just a very social section that we all get to hang out at and just have a great time. So
Those were
That's
great
awesome to
seats,
have
buddy.
that opportunity there too. So
yeah, I we usually do it towards the beginning of the year. This time it kind of landed towards the end of the year, but unfortunately they didn't make the playoffs, but it was a blast. So
okay.
it was great to get out and just hang out with friends, and all my coworkers are friends at this point. So, well, you guys, I wanted to take this opportunity to introduce the one and only Daniel McManamon. He is our Northeast Region Sales Manager for Renovation Loans. He is our resident expert, and he's helped walk Matt and I through quite a few different scenarios, trying to help out clients. Something that, we don't always take advantage of these types of products that exist out there. And as a matter of fact, a lot of people don't even know that they exist. You walk into a house with a client and you're like, oh, this thing is so banged up. Like, I don't want to touch it. Like, and you walk away from it where you might be walking away from a gold mine, an opportunity to make a lot of money just by utilizing a different type of loan and having a conversation with folks that understand the products and understand the opportunities that are out there. So I wanted to bring Daniel in. Like I said, he is our expert, and we've done a couple, but he's done a lot more. So he's going to talk to you guys today about renovation loans and all the different types that are out there. So without further ado, you have the floor, my friend.
All right. Well, Matt, Ed, thank you for inviting me to come on. Thank you all. It's 12 o'clock out here, and it's 9 o'clock out there early. I like to joke with my, I used to try to run these calls nationally, and I would do it at like 12 o'clock. And it seems like that sometimes is still too early for California coast. So I'm like, geez, I mean, you guys can't get a cup of coffee or anything that early in the morning,
now.
So I applaud all of you that are up on this call, 9 a.m. Because not just my obvious passion for renovation loans, but I truly do believe in the next 3 to 5 years, the loan officers, as well as real estate agents that, I'll say for a better lack of terms, embrace renovation loans. Those will be the folks that are still in the business. I know there was the statistics that we see on how many real estate agents and loan officers were in the market, a year ago, 2 years ago, and what's the projections and how drastically different it's going to look. And those that stay focused and maybe I was talking to a real estate agent last night and I said, she was trying to find her niche. And I was like, well, you are talking to me. Like, how about we kind of sit down and grab a cup of coffee and kind of talk to you about how to embrace renovation loans and let that be your niche, right? So renovation loans, I know when I've spoken with folks out in California, when I look at the numbers for Movement Mortgage, a huge amount of opportunity. I was in San Diego a year ago. Okay. Came out and visited with, another market leader and did some training for his loan officers. And I'm driving around some of these areas and I definitely see it's not just all these big McMansions that are out there. There are opportunities for renovation loans. I'm driving past some of these houses and I'm like, well, that house looks like it could be a renovation loan. Like, why are we not trying to look and market certain areas? I always say, we look at the age of a house, the average age of a home in the United States, and this is across from coast to coast, and even down to Texas, that we call like the third coast, right? It's over 64 years of age. My parents, they sold their house a couple of years ago, the new construction house. That house, that development's like close to 40 years old. And you drive through the neighborhood and it looks beautiful. However, there's a lot of things that could be happening inside that are dated. Okay. So my biggest takeaway that I want you to all have today is both on the buying side and the selling side. We're going to talk about that as well, is that we can't change the location, but we can change the house. So if you're tired of driving the clients around and we start having the conversations about renovation loans and about the product availability, okay, that potentially you stop driving to a house and you start driving to a settlement office, because that means the deal's closing and you're going to be getting a commission check. I do believe, like in California, it's a little different than out here on the East Coast. You guys go to a settlement, but then you don't get the keys for several days. Is that true? Is that how that works out there?
No, we're an escrow state, so not an attorney state.
Yeah. So
the escrows close as soon as it gets recorded. They get the keys that day.
yeah. So it's kind of interesting because I did a loan for the CEO of the Newark Art Museum, and she was originally from San Francisco. And we were at the closing back in 2019, and she's like, "All right, so when do I get the keys?" And we're like, "Today." You get the keys today. And she was trying to explain to us, like, wow, that's crazy. So renovation loans. So there are multiple types of renovation loans. The most popular common one that we hear about is the 203K, right? That's the one that loan officers all the time, real estate agents all the time. That's what the National Association of Realtors, as well as whatever big association oversees loan officers, that's kind of the one that's jammed down our throats and into our brains. So yes, there is a 203K. That is FHA's version. Okay. There's two different types of FHA loans. There's the limited 203K, which is exactly how it sounds. You're getting limited scope of work. It's nothing structural. It is that, oh, I'm really concerned about accepting this offer or submitting this offer because it's an FHA pre-approval. And what about lead-based paint? Or what about maybe some flooring issues? That's what's the beautiful thing about the 203K limited, is that we can address all of that scope of work, okay, within that loan. So you don't have that concern. Then you get into what's called the standard, or some people still call it, the full 203K. And that's where the projects get much bigger. And maybe there is structural work. So you could maybe have a project that's only $20,000 worth of work, but because it's structural, now it's considered the standard 203K or the full 203K. The biggest difference between the two is, are you using a HUD consultant or are you not using a HUD consultant? Anytime you have structural issues with the property, doesn't matter the size of the work, doesn't matter how, if it's a $20,000 project or it's a $50,000 project, HUD consultant is required. Also, if the scope of work, whether it's not structural or not, exceeds a certain dollar amount. Now, if you're all are really bored and you decide to read the 4000.1, which is the handbook around FHA loans, you will see a better breakdown. If you try to use that thing called Google, as I always jokingly say, Abraham Lincoln says, don't believe everything you read on the internet, okay? You're going to see this magic number of 35,000. The 35,000 is not the contractor's estimate. It's what we call the total cost of renovations, okay, which is the contractor's estimate plus what we have, what's called a contingency fund, and then some renovation loan fees. That number can't exceed 35,000. Generally speaking, when the contractor's estimate exceeds like 28,000, then that's when we probably are starting to have the conversation if we need a HUD consultant or not. Okay. Any questions so far? Feel free. I know, Ed, you maybe muted everybody, but if you want to unmute everybody, and hopefully we just don't have any background conversations. Any questions, or if you want to throw it in the chat box, I'm going to pull that up. Please.
If anybody wants to unmute themselves, by all means, chime in. It's an open
Please. Yeah.
conversation.
I do have a question.
Go ahead. Question. Who has a question? Who was it?
Oh, yeah, so the first loan was for, it was a 203K loan.
Yes.
What was the second loan you were talking about?
Well, they're
The one
both
with the structure?
203Ks. So we have what's called the limited 203K, which, and
Limited,
that's
got it.
kind of your limited scope of work. It's non-structural. It's the, I really don't want to accept this FHA offer. I'm concerned about submitting this FHA offer because we might have peeling paint, or there might be some other things that you notice cosmetically an appraiser might pick up, right? So, and then you have the standard or the full 203K, right? Which is the grander project. Okay. Maybe it's a multi-family project and you're doing a lot of stuff. Okay. Great question. Okay.
So the standard one's got 35,000. The limited one has what kind of like, what is it limited to dollar amount wise?
Probably I would say a good number just to keep in the back of your mind is 28,000. Okay. 28,000 and under, then that's kind of the limit, as well as long as, again, it's not structural. Okay. Lawrence Avila, question.
You actually just answered it right now.
Okay.
Structural. What kind of things would actually disqualify
Yeah.
this loan?
Yeah, it's structural concerns. Like there's a young lady up in upstate New York I'm helping out, and that project is under the 20,000, but because of structural concerns, we need a HUD consultant involved. I will at the end of the call, I'll give you the link on how to find a HUD consultant. We're going to talk about that. Eric Nelson, you have a question?
Are these new loans, are they kind of spun in with the regular FHA loan, or I'm a little bit confused because I'm new to all this, but is this a separate loan from your regular home loan, or is this an additional loan that's spun into the regular, like a regular FHA loan?
Okay. That's an excellent question. Excellent question. So this isn't a new loan. An FHA 203K, that loan's been around for probably 40 plus years. So, but to answer your question, yes, it is. It's one big loan. Okay. So we would take whatever contractor's estimate, the contingency, and some of the renovation loan fees. Okay. And we add that on top of the sales price. And then that number we call your total acquisition. And that's what we want the house to appraise for. And that's what the customer is going to give their down payment on. We're going to give that contractor's estimate or a HUD consultant's report to the appraiser. And the appraiser is going to say, if all of this work is said and done, this is what the value of the home would be. Okay. Does that answer your question?
Yeah. So a buyer can attain this loan on top of whatever they're buying the actual home for, right?
Yes. So so if you look at FHA loans, Eric, you have FHA 203B, which is just a regular FHA loan, and then you have FHA 203K. All it is really a tax code. So it's still an FHA loan. Like if you look at someone's credit report that did a 203K, it's not going to have like two separate loans. It's one loan, and it's just going to say FHA on it. Okay.
Got it.
All right. Great questions. Great questions. So those are the two. Like, so you have HUD. HUD oversees housing, urban development, oversees FHA. Within that, we also have, and you're wearing a Blue Lives Matter, and there's the one renovation loan I am extremely proud advocate of, and that's our VA renovation loan. So I had a phone call about a month ago where I called the listing agent up and wanted to let them know, hey, I already had this client pre-approved through underwriting, blah, blah. And she's like, oh, great. Thank you so much for calling. And she goes, oh, by the way, what type of loan are they doing? And she said, I said, it's a VA loan. And she's like, oh, we're not accepting VA offers. And I just had to mute myself because it really got me upset. And I had said to the agent, I said, well, the fact that you could make that statement in our country is why you should be accepting a VA offer. And she said, well, it's an estate sale. It's being sold as is. I said, you understand that there's also something called a VA renovation loan. So all of your concerns that the appraiser on a VA might bring up about peeling paint or anything else, this borrower has already been approved for the VA renovation loan. and has a contractor lined up ready to go. And it was just like crickets. And so I just beg you, please. We have this beautiful country we live in, and we have the ability to, again, we can talk. We were talking about college football. I mean, the head of processing decided to call me at 8:30 this morning to bust my chops about Ohio State beating my beloved Notre Dame, right? We have the beautiful freedom of speech in our country, and these men and women that have fought or fight for our freedom. I just ask you to please speak with Ed, speak with Matt, reach out to me about the VA renovation loan and everything it can do for our veterans, right? So if you have that customer that's looking to buy a home as a veteran, you're in San Diego. Okay, I remember when I teed off at 15 at Torrey Pines North last summer, there were 2 fighter jets that flew right over after I hit a ball, right? So I said, well, if that isn't an American tee shot, I don't know what is, right? So it's a great opportunity to help our veterans right there in the San Diego community buy a home. And if there's any concerns, as long as it's not structural, we can go up to 50,000 worth of work. So if there is a peeling paint, they don't like the kitchens, maybe they don't like the bathroom in the house, okay? Or if there's a roofing issue or something like that, we can address that with the VA renovation loan.
That's what I was going to ask you, Daniel. That figure, 28,000, was that on the standard, right? The
No,
standard.
that's the 28,000. That's on the limited 203K.
Okay, but on just the regular, because
you could go up to a project, so to 500,000 on a renovation loan.
okay,
if not
so
higher.
like the bathroom, kitchen,
Anything.
all the plumbing and electrical that goes with redoing the kitchen and the bathroom, and the ceiling that the HVAC guy almost fell through. That's not structural, is it? Okay,
No.
thank you.
No. So, and that's a great question, right? So, you have the limited, right? That's structural. The standard's not, right? And I'm going to get into like what you can and can't do at the end of this, okay? Which will kind of piggyback into your question, Dana. Okay. The VA is non-structural. You can't, like, if there's, I don't know if you all have septic systems out here. Septic systems, believe it or not, is very popular in New Jersey. Okay. There are counties in New Jersey that not everyone's living on top of each other, similar to like Bergen County, which is right by New York City. Okay. So we can't have with the VA loan, it can't be anything that requires permits. Okay. But it's that great product when you're helping your veteran and you're concerned about the condition of the property, okay, because of peeling a paint or something, we can address that with the VA loan, okay?
Well, we do have a lot of really old bungalows that go back almost to the turn of the century.
Yep.
You never know what you're going to get when you start cutting.
And that's true, but that's a great opportunity for those older bungalows for our men and women that are fighting in San Diego, or in the active or veterans. That's a great opportunity for them to become homeowners. And now think about this. You're going to buy this house. The active military or veterans are going to buy the house, especially if it's active. And you're going to do a renovation loan. And typically with military, they get relocated quite a bit, right? So maybe they go to settlement next week, and 3 years from now, they get transferred. Maybe they get sent over here to the East Coast. Okay. Well, now, wouldn't it be wonderful for you to be able to have that opportunity to list that house as newly renovated? So now you're helping a veteran, you're helping an active military man or woman get into a home with the VA renovation loan. And then you can look fast forward 2, 3, 5 years from now. Now you can sell that house as newly renovated. And that goes for anything. Okay. But I'm just speaking primarily about the VA. Now, another product that we have that we just rolled out last Tuesday, okay, which again, I don't know how popular it is, but I do believe in certain areas of California, it could be, is the USDA renovation loan. Okay, so if you have any clients that have been looking and and there's some areas and Ed and Matt can help you with determining what areas are USDA eligible. There is a lookup tool
Yep.
for that.
Ramona, Fallbrook, you guys, Alpine, Julian, all these areas that are out in the burbs, they all fit into that USDA, which is 100% financing as well.
Yes, perfect. I mean, we did a call. Thank you for chiming in there, Ed. We did a call last week, a national call when it rolled out for the training. And one of the great questions was, well, why would someone do a USDA reno versus an FHA? Well, it's down payment. USDA 0% down payment. And with the USDA, we can do structural work. Okay. And we can go up to 75,000 worth of work. So just another option. So HUD, as I mentioned earlier, HUD is the housing urban development. Underneath that are 3 categories. Okay. You have FHA, VA, USDA. We do renovation loans for all 3 of those columns, which is great. Okay. All of those, okay, the FHA owner occupied, the VA owner occupied, USDA owner occupied. Okay. For the FHA and the VA, it is 1 to 4 units. But for USDA, it's single unit only. Okay. I believe there was a question in here Christina asked, which is probably one of the most popular questions, is rates, interest rates. Interest rates typically are around the same as a non-renovation loan. Maybe they're at the highest, 1/4 to 3/8 higher. We leave that up to Ed and Matt. A lot of times that shouldn't crush if someone qualifies or not, that 1/4 point difference in interest rate. Okay. If not, those gentlemen are magicians. They can figure out how to make it work. Okay.
They're usually pretty darn close.
Yeah. Yeah.
But I mean, it is a
they're
more
usually
expensive product, so it's just a little bit more expensive. It's a smidge difference. I think it was not even a 1/4 point last time, or 1/4%, Matt. On the last one we just did.
Yeah, it shouldn't be.
Yeah,
It
it truthfully
shouldn't
was
be.
pretty much apples to apples when we were looking to flip this other one to see if we could do reno. It was pretty much the same rate, so we didn't see much difference in rate.
Here's a great
pounds.
Yeah, here's a great question. How does the VA renovation loan differ from the 203? I guess the 203K. Can't do structural. Okay, you're limited on the scope of work of 50,000. Can't do structural work with the VA. It's really supposed to be, hey, let's get into this loan. Let's fix those minimum property repairs concerns of VA loans. Maybe also update the kitchens or maybe update the bathrooms. Okay. But we really want the work done and us being able to take that loan and get it off our books within 4 months. Address the question about interest rates.
And that was something I learned, Danny, on this last one that we had, because we had a cracked slab, right, on this house, and I never knew about minimum property requirements and how they do not add value to the house.
No, they don't. They don't.
Right?
Yeah.
You would think like you would pay more for a house without a cracked slab than you would with one with a cracked slab. But there's a baseline at which like that house has to have a roof. It has to have like a foundation in place, right? That's not broken. Like it has to have these basic minimum property requirements that have no benefit to adding value. But changing a kitchen, bathroom, what have you, doing new floors, new paint, that will add value. So it will make a difference in the appraisal. Just so you guys know.
So and that's always the biggest when the renovation loans come over to us. I'll reach out to the loan officer and say, okay, what's the scope of the work? We'll reach out to the listing agent, or have the loan officer reach out to the listing agent and say, hey, can you give us your best educated guess on what you think the value will come back at? Just so we know, where we're looking. Okay. So now we talked about owner occupied under HUD, FHA, VA, USDA. There's also another renovation loan product called the Homestyle Renovation Loan. And that is one that can be used on 1 to 4 unit owner occupied, single unit second homes, and single unit investment properties. So if you work with any investors and they're looking, I work with a gentleman who last year they bought 3 investment properties down at the Jersey Shore, not far from where that ridiculous show was filmed. Okay. And their scope of work, I mean, the one project was like $17,000 and the highest was like 42,000. And you might be saying like, well, why would you even do a renovation loan when it's only $17,000? Well, because between those 3 projects added up to near like $75,000, $80,000, that customer is then able to take that money and save it for their next investment property down payment. So, and he's like, it's not really changing the payment that much. It changes it maybe like $65 a month for every $10,000 borrowed. So what's the big deal? Okay. So just think of it that way. You have somebody that is looking to buy a second home. Okay. Whether it's maybe up in Tahoe or down on the beach. Okay. You can use that for single unit. And then owner occupied, I will tell you this, October 2nd will be 10 years. I've been doing renovation loans. I've probably closed well over 300 myself, and I've probably helped loan officers with thousands. Okay. It's only maybe been twice I've seen someone do an owner occupied multi-unit on a renovation loan. And that's because, and this is a whole different conversation, Matt and Ed can talk to you about, there's something with FHA loans called self-sufficiency on 3 and 4 units, and it gets tricky. It gets very tricky.
Especially here in San Diego, it doesn't work, you guys.
It doesn't work it doesn't matter where it's at. It doesn't matter if, again, I talk to loan officers in Ohio, Idaho, Tempe, down to Louisiana, down in the bogs. Okay. It doesn't matter. Self-sufficiency is very tough. Okay. Now it gets into the biggest question also, and kind of let's piggyback on Dana's question, is what can and what can't you do? It's easier, like loan officers will call me up and say, hey, I've got this customer that's looking to do a renovation loan, and they're wondering if they can, yes. And they don't even get the sentence out. Yes. Well, hold on. Let me tell you about the project. Yes. They want to knock the house down and rebuild it? Yes. Okay, you can do that with a 203K. Right. So now that kind of goes to your question, Dan, right? So like you have this house and you're like, oh my gosh, this is a typical house that everybody thinks as far as the renovation loan. It's that disaster house. It's the one that's all boarded up. It's mold infested, right? It'd just be better if we just knocked the house down. Okay, let's do that. Let's knock the house down and rebuild it on that current foundation. You can do that with the 203K. What you can't do with the 203K, the VA, the USDA is add a swimming pool. You can repair a swimming pool. You just can't add a swimming pool. And
What
I'll
about
tell
an
you again,
ADU?
1 second. Okay, I'm going to get there. In 10 years, again, I've been doing this. I talk more people out of trying to do a swimming pool because it doesn't really bring value. Okay. Yeah, it's a nice luxury to have. And I know our friends down in Florida, they'll be like, no, we need a swimming pool. You're right. I get it. Right. But it doesn't really bring the value. ADU. Yes, you can do an ADU on an FHA 203K, but it has to be attached. On home style, it can be detached. Okay. On the home style, the only thing you can't do is knock a house down and rebuild it. You could gut the complete house inside, okay, down to the 4 walls and start all fresh. And that's still considered a renovation loan. You can add the swimming pool. You can add an ADU. Most definitely. Eric, question. You're muted, my man.
Sorry. Can you refinance into one of these loans?
Yes. Yes. You not on the VA and not on the USDA. But the FHA and the Homestyle, yes, you can. 50% of my business has always been refinance renovation loans, where contractors will come to me and say, hey, I have a Kish family. They're looking to do this addition. They don't want to sell. They have young kids. But they're looking for financing options. Okay. If you follow me, it's kind of corny, but you follow me on Facebook, Instagram, you'll see a lot of my posts, okay, are around that, remodel, renovate, stay put. What are you looking to do? Take your house and make it your dream home, or you're out there in the purchase market and you want to buy that house and make it your dream home. Renovation loans, that opportunity as well. Okay. So, marketing, we have a lot of great marketing opportunities. It could be lawn signs. I've done it in the past where I've even helped with open houses. Okay. Now there's a really cool, I know it's kind of corny, and really cool app for this, but there's a really cool app. My wife actually found it, give her the credit. It's called Remodel AI. It's $50 a year. Okay. Don't do the monthly prescription or subscription, because it comes out to being like $72 for the year. But what you can do is you can walk into a room, you could take a picture, and you can then go and say, hey, I want this kitchen to be a modern look. And within like 60 seconds, it pumps out 3 or 4 different looks, modern looks of what that kitchen could be. So then you could turn to your client, and instead of, when I got into the business again, it was, hey, walk into the house, envision what it would look like, smell the fresh paint. You don't need to do that. You'd be like, see, this is what it can look like. And you can immediately, especially and I don't need to talk to you guys about it. You're in California, right? You're on the West Coast. Everything's, with Google and Yahoo and everything, Silicon Valley, everything's got to be instant. It's got to be instant gratification, right? Well, now you can turn to your client and say, here we go. This is what it looks like. Okay. Ed, Matt.
Sorry.
Go ahead. Do it. You first, Eric.
What's the name of that app again? I'm sorry.
It's called Remodel AI. It just looks like a house, and then there's like a white house, and then there's a circle, and it looks like a rainbow color in the background. Okay. So, but loan officers, like, I'm going to start creating vision boards for the LOs, like out in this area. That's a great opportunity where you can go into a house and you can take pictures of a room, and you can help recreate, like if you're doing an open house with a real estate agent, you could create a vision board and say, hey, this is what this room looks like, but this is what it could look like if you wanted it to be like French country or modern or whatever. And you can have some pictures of it there, and then you can work with even. So I always try to encourage finding contractors in your area. We can have conversations with contractors about how the renovation loan works. Okay. We can get some contractors' estimates on what it could look like when you do an open house. That could help there too.
Super cool.
Okay.
Great idea.
So, there's an abundance. Every house can be a renovation loan. I jokingly say I'm not just a president, I'm also a client. I did a renovation loan. The house I'm in is it's all blurry in the background. This is my home office. When my wife and I purchased our house 6.5 years ago, my daughter, when we closed on the deal, was 4 months old, and my son was like 3 years and 4 months. He's now like his old man and never shuts up, but at that time he was nonverbal autistic. Okay, so our house, technically the way the builder built it was the master bedroom was downstairs, but there was unfinished dormer space above it. So my wife and I were looking to do this renovation loan because I guess I have to practice what I preach, right? But we started thinking about something else, and she was like, well, hold on a second, this doesn't make sense. The master bedroom's downstairs. We redid the dormer space that was above that into a master suite. And then the room that was right next to it, the 12 by 15 room, we converted that to his and her walk-in closet and another full bathroom. Okay. So we were able to take the space that was not used and make it livable space to fit our family's dynamics. So how many times have you gone out to a house and you were like, I can't believe they didn't put an offer on this, Ed. I can't believe they didn't put an offer on this, Matt. We're like, and then why not? The location we thought was perfect. It was on a cul-de-sac. It was in the school district that they were looking to do. Like, why did they not put an offer in? Maybe it's because they just didn't like the kitchens, or maybe there was not enough bathrooms. You can do an addition with this. So maybe it was, they really wanted a 4-bedroom but it was only a 3-bedroom. Well, was there a place that we could do an addition and add another bedroom, making maybe even a master suite, where now you have adding not just a bedroom count and square footage and room count, but also bathroom count. Okay. You have that young customer that, hey, they want to be that next like Grant Cardone, okay, and having all these investment properties. You got to start somewhere, right? So maybe they're looking to buy that multifamily, that 2-unit property, and they can get in. We have a big initiative here at Movement Mortgage with Grab the Keys. We're trying to help with the minority population in becoming homeowners. And we're partnering with the renovation department with those two individuals, Mike and Montel, that are spearheading that on, hey, let's look at the 203K as an option for these families. Now they're going to go and buy a 2-family. They're going to live in it maybe several years. They're going to have equity, and maybe they'll have some savings, and then they decide to move out to the suburbs. And now, but they don't need to sell that 2-unit. Now they have an investment property. So, or the college, you have the parents that the child's maybe going off to college in a couple of years, and they're looking at going maybe to San Diego State or UCLA or that other college in California with the Trojan as the mascot. Okay. We at Notre Dame do not pronounce them. Okay. But maybe you want to have that parent look at buying a multifamily house, or maybe even an investment property, and they can do a 203K, and their child is the primary borrower, and they're doing it as a non-owner occupied co-borrower. So like I've had that where a couple customers, they bought this investment property where their children are going to college, and now they're renting out the rooms to their friends. The parents are all saving on the college room and board. And then once the kids are out of college, they're probably just going to sell a property because they don't want to be landlords at, that college, but it helps lower that. And everyone's just basically paying off the mortgage. So, or maybe they keep it as an investment property. Who knows? So, any questions? I'm looking at it's 1:45. Time flies when we're having fun, right, Dana? So, it's nothing better than talking about renovation loans at 9 o'clock in the morning. So,
I think you answered all the ones that were in the chat. The difference between a VA and a 203K, one's FHA, one's VA. And then you're allowed to get into structural work, right?
mm-hmm.
With an
Yeah. I mean, the
FHA.
VA, you can't do structural work. The 203K, again, obviously you can knock the house down and rebuild it if you want to.
So, ADU, we have such a inventory shortage here in San Diego. I mean, it's incredible.
Everywhere.
Yeah, I mean, it's nationwide, but we have 2,300 properties for sale for 3.5 million people. Okay, and ADUs is a big thing. You
Mhm.
mentioned that it had to be attached. How
For
would
the FHA, for the
how would it have to
FHA,
be? Okay, with FHA.
yes, US or for USA, FHA, it has to be
Homestyle.
attached to the house. Homestyle can be a separate dwelling. Like there was another gentleman who used to work for a company, RJ. He did a detached ADU. That's allowed in Fannie Mae
In the home style.
in the Homestyle. Yep, doesn't have to be attached. So, which I think would probably be a lot more popular than attached.
So you
This
guys are
isn't-
going out there looking, you're seeing a banged up property, and big deal. Like if it's got a big backyard, think about what potential it might have with the
Yeah.
right loan. Right? Having that conversation with somebody.
Especially if the renovations add value to the property.
So just want to, make sure you guys are like thinking outside the box and not just like, oh, hey, this home doesn't work for me. Well, we can make it work.
Mhm.
Especially
100%.
those properties that you're looking at is like, oh man, that's going to take so much work. This is going to be a cash only offer. Not so fast. Not so fast. It could be a cash only offer if you wanted to be. Now it could be a financed offer. The seller's getting top dollar for the sale of the property. They don't have to succumb to cash offers because you were the one to offer the renovation loan, and we could close it in 45 days or sooner.
Yeah. Yeah. I mean, we could close these in 45 days or less. The biggest piece of the pie is the contractor piece. If you don't have a contractor, then, Ed Maddock can, explain to you how we can navigate around that with the use of a consultant, even if it's a home style, to keep the ship
Process
still
flowing, yeah.
moving towards the closing date. Right. But it's every house. That's just in this low inventory market. Every house can be a renovation loan. Think about those homes that maybe were sitting. Okay. We're going to start seeing more of the banks and the investors rolling out their foreclosure inventory. And it's not because of I told you lenders that we were going to have this big foreclosure thing after COVID. No, that has nothing to do with it. It's just these investors and the banks held on to and didn't release their inventory during COVID because of the craziness. And now they're slowly dripping those properties out there. So typically foreclosure homes do tend to lead to a renovation loan because sometimes the condition of the property, okay, but doesn't have to be. And again, it's just, there's a lot of homes too that we see, like, I don't know how it is out there, but I know like out here, a lot of estate sales, baby boomers selling, or, unfortunately, maybe mom and dad passed away. Now the children are selling the house, like in my example where they're like, no, it's an estate sale. And it's like, it doesn't matter. I have something to fix it. Like, stop the nonsense. Right. So, and then cash offers. How many times do you think you could probably get a higher accepted amount on a financed offer than a cash offer? And how many of those cash offers truly go to the closing table? So often we see those properties where it's like, oh, they took a cash offer, and then like 3 weeks later, it's right back on the market. Oh, what happened? Oh, they had some inspection issues. You do realize like 3 weeks ago, we were doing a renovation loan and we didn't care about the condition of the property. We were addressing all that, and that we would probably be a week or two from closing. And now you got to relist it and start all over. So that's my big thing too, is, cash can usually get you more. And also a lot of borrowers in this, we're waiving inspections, which to me baffles me and concerns me, but right. Hey, we're waiving inspections just except for structural things. And if the structural thing comes up and it's not that big of a deal, we'll do a renovation loan with it. So
Just so you guys understand the logistical difference between like going through a quick loan that's already being pre-approved in like 15 days, right? Versus a 45-day renovation loan. We have that added element of that contractor going out and creating a bid for us, right? That's really the only difference. And that's the biggest delay game that we face, right? Is having that extra person that if they're not lined up, we got to find them. We got to ask for multiple bids sometimes. You have a roof that needs to be replaced. You want 2 or 3 people kind of taking a look at it. You don't want to go with the first person, right? necessarily. So you have to have that kind of stuff in play lined up, like right when you see that house and your client's like, okay, yes, I can see the potential in that. This is what I want to do. Next phone call should be trying to get that contractor lined up, get them out there as quickly as possible to at least glance at the property and tell you what the potential is. And that way we can expedite that 45 days and bring it down. I mean, ours didn't take 45 days. Ours was like around 30 days. So
32.
32 days. Thank you. But yeah, again, it really depends on that contractor. So they go out there, you get the contractor out there, we get that bid. As soon as that bid goes out, then we get the appraiser to go out because they're going to appraise that property as is, right? Excuse me, not as is, but as if everything was done.
Yep.
Right. So that's the major delay, right? It's usually a couple of weeks that it takes for all that to play out. That's why it gets pushed a little bit farther. But if you have it dialed in, like there's very little delay. We could do a 30-day escrow all day long. Does that make sense, you guys? Cool.
Well, I really appreciate the opportunity, and congratulate all of you for coming on this call. Because say I had a HUD consultant ask me, hey, maybe we do something as a CE. And I said, no, because so many, just like loan officers, we're only going for the free food, where we weren't offering you any free food for this. And all of you showed up to learn something new and learn how you can help increase your business and help your clients, whether it's on the sale or the purchase side. So I applaud all of you for taking this time out of your day on a Monday, especially since it looks like it's sunny there, and listening to me talk about renovation loans. So Bernie's like, is it sunny?
And
So,
John, the answer to your question is yes. With the Homestyle loan, you can do a second home.
a single unit
Single
only.
unit.
Single unit only. Same with investment properties. Single unit only. Okay. So
You guys, Danny,
thank you
thank
again.
you so much for your time. man.
Absolutely. My
You're
pleasure.
Such a
Thank you
wealth
for
of
the
knowledge.
invite.
Really appreciate you coming on here and helping all of us get a little bit smarter today. I really appreciate all you guys sticking it out and listening and learning, and hopefully we can all go out there and get some more deals.
And please continue to ask the questions. Send them over to Ed and Matt. Matt will get them over to me, and we'll get them answered very quickly for all of you. Okay.
Thank you guys so much.
Thank you, Daniel.
Have a good
Thank
one.
you all for
Have a
joining
great
us.
day.